We have Janet Yellen wrapping up a 4-day visit in China, complaining to China about its overcapacity. What do you make of overcapacity risks?
Well, I think first of all, it's good, very encouraging to see US and China proactively talking to each other. That's going to inject the stability to the international relations. And for the overcapacity, I think interestingly, last year when the market was anticipating or hoping for some big stimulus, the response we got from communication of Chinese officials tend to be they are mindful of the potential distortion to the market. For example, the 4 trillion package back in 2008 famously created some overcapacity concern. So they didn't do the big stimulus because of that. And this year, during the 2 sessions, actually the PBOC Governor Pan Gongsheng already said China is going to curb financing to some of the overcapacity sectors. And when we look at the data, interestingly, some of the overcapacity sector turned to be due to the insufficient demand, such as in cement and steel. Obviously, the property sector slowdown contribute to that. And others, for example, what Janet Yellen mentioned in the green goods, some of that was, I think, due to the competition among local governments. And also, it depends on how you look at the time horizon. From a longer time horizon, maybe not so bad.
Right. What does it all then mean for China's growth, you think? I mean, for the year, for instance, will it get to 5%?
Yeah. So actually, we have seen encouraging signs on the consumption. For example, in the Qingming Festival, the 3-day, a small little break, we see the per capita spending for the first time was more than the 2019 same period level. And we believe the consumption will continue to perform well. And that's going to contribute probably by our forecast more than 2/3 of the growth this year. And obviously, the market is still concerned about the property. I think for the property sector, we do see the new dual-track model seem to help to some extent. For example, the second-hand housing transactions pick up quite substantially, but the new home sales are still yet to improve.
Is the property sector actually getting any better? We heard from Shimao yesterday, and that's adding to concerns for the sector.
I think so, yeah. So basically, if we look at the second-hand market in large cities, the transaction volume pick up a lot. That is because we see the price correction in this sector probably reflect more quickly. Because in the past, all different kinds of home purchase restrictions seem to impact the new home more than the second-hand home, such as a price control, etc. So in that sense, if China is going to let the private housing return to the commercial sense, which means the market demand and supply will play a much bigger role in clear the market, we think the stabilization will come later. And of course, the government is also using the, converting some of the private housing into public housing as an anchor to stabilize the market.
Clearly, China's economic weakness is impacting its currency, and with the Fed likely to stay higher for longer, the currency is expected to be under even more pressure. Where do you see the yuan headed from here?
So I think, just now the panel, we hear from the St. Louis former governor, James Bullard. He was talking about he anticipates 3 cuts this year. That's exactly the HSBC house view. So, although probably the rate cut will be slower this time, but it's kind of confident to say Fed is near the peak of the hiking cycle. That will take some pressure from yuan. And at the same time, we do see Chinese economy continue to rebound, and that will put some anchor to the, overall the yuan exchange rate as well.
But the yuan has been anchored because of the PBOC's very, very strong fixes. Without the fixing, where would the yuan actually be?
Well, I think, that's an interesting question. If you look at the CNH and CNY, over the past several days, we see some convergence between CNH and CNY exchange rate. So that shows, to some extent, the recent data print point to stronger fundamental can support the yuan, and at the same time, as I said, the Fed going more dovish can help as well.
Of course, the market's looking at further stimulus from China. Can we expect that this year?
Well, I think, by our calculation, the actual broad-based fiscal impulse this year will be stronger than last year. And that comes in different formats, including we see this 1 trillion special treasury bond. And also, we can see the central government is shifting more spending responsibility to its own shoulder. That's going to help, especially when local governments are probably quite tight in their balance sheet as well.
Are you concerned that China's economy might be weighed down if Trump were to come back to power? He's already promised 60% tariffs on Chinese exports.
Well, this is an interesting question. We see the first round of the trade war. Actually, a lot of Chinese manufacturers start to look into the supply chain relocation, just trying to avoid the punitive tariffs. That's why we see, ASEAN and Mexico all receive a lot of FDI. If Trump were to come back to power and impose such a high tariff, I think the trend will continue.